So here's a crazy thought. What if I told you that some of the smartest people in finance are making a bet on something that has literally never happened before in the entire history of business? Well, today we're going to unpack that exact bet, the trillion-dollar wager on OpenAI, and why it might just be the most insane financial sprint we've ever seen.
To really get our heads around this, let's use an analogy. Imagine you're at the Olympics, but you're not just betting on a sprinter to break the world record. No, you're betting they're going to run the 100-meter dash in under 5 seconds. That's twice as fast as any human being in history has ever run. It seems physically impossible, right?
Well, that incredible, seemingly impossible feat, that's pretty much the financial performance the market is expecting from OpenAI. It's a demand for growth that feels like it defies the basic laws of business physics.
And it all comes down to this one absolutely staggering number, $1 trillion. That's the potential stock market valuation being talked about for an OpenAI IPO. A number so huge, it puts the company right up there with giants like Apple and Microsoft.
So how on earth do you justify a $1 trillion price tag? Well, you have to deliver this. 108% revenue growth every single year for 5 years in a row. Just think about that for a second. You have to more than double your entire business and then do it again and again and again for half a decade straight.
So this is what we're calling the $1 trillion sprint. It is a completely unprecedented race against financial gravity itself. Which, leads us to a really simple but really important question. Has any company ever in the history of the world actually run this fast? To answer that, we've got to cut through all the hype and just look at the historical record. I mean, what does the data actually say about pulling off a feat like this? And lucky for us, we have the perfect tool. A recent Morgan Stanley study dug into 75 years of data on publicly traded U.S. companies. We're talking about almost 19,000 different observations of how companies grow over time. And this right here, this is where the scale of the challenge just becomes ridiculously clear. Look at this. To justify that valuation, OpenAI needs 108% annual growth. Now compare that to the legends. Google, during its most explosive, world-changing era, hit 49%. Amazon, at the absolute peak of the e-commerce revolution, managed 29%. And the average U.S. company, just 7%. The gap between what's expected and what's ever happened before is just, well, it's enormous. So, what are the actual odds here? According to the data, this isn't just unlikely, it's a full-blown statistical anomaly. The odds are so low, it's basically a near impossibility. It's the financial equivalent of getting struck by lightning on a perfectly clear, sunny day. In 75 years of data, this has never, ever been observed. Now, I know what you're probably thinking. The immediate reaction is, yeah, but this is AI. It's a revolution. The old rules don't apply anymore. And look, that is a totally fair point. So let's really dig into that. But here's the thing. There's a huge difference between this AI revolution and the internet boom back in the 2000s. The internet was mostly built on software and code. It was what we call capital light. Today's generative AI, though, it's a revolution built on massive, power-hungry, and unbelievably expensive hardware. This is a game of physical stuff, data centers. And this intense focus on building physical infrastructure, well, it comes with some serious risk. And honestly, we have seen this movie before. Just think back to the fiber optic bubble. In the late 90s, investors poured billions into laying fiber optic cable, betting that internet traffic would just grow to the moon. And you know what? Traffic did grow, but the problem was the infrastructure grew even faster. The result? A massive oversupply, prices crashed through the floor, and a whole wave of companies went bankrupt. This all brings us to the hidden costs of intelligence, because AI isn't some kind of magic that just happens in the cloud. It has a very real and a very, very expensive physical footprint. Take building these huge data centers, for example. Experts call these things mega projects. And history tells us something pretty sobering about mega projects. More than 90% of them go over budget or get delayed. It's almost a baked-in feature of large-scale construction. So what we're seeing right now is a full-blown infrastructure arms race. When one of these tech giants announces they're spending billions on data centers, it's not just about building more capacity. It's a strategic chess move, a way to signal strength, keep investors happy, and maybe scare off the competition. And this race is only getting hotter. The projected investment in data centers for 2026 alone is a jaw-dropping $650 billion.
I mean, to put that in perspective, that's roughly 2% of the entire US GDP spent in a single year on building these AI factories.
Okay, so what does all of this actually mean for you, a potential investor, looking at an OpenAI IPO down the road? Well, it creates a pretty serious dilemma.
You have to look past all the flashy headlines and ask 4 really critical, maybe even uncomfortable questions. First, profitability. How much cash are they actually burning to make each new dollar of revenue? Second, depreciation. How quickly do these multi-billion-dollar data centers become obsolete? If you have to replace the chips every 2 years, that's not a one-time cost, that's a gigantic recurring expense. Third, dilution. As they keep raising billions and billions, is your potential piece of the pie shrinking into nothing? And finally, you have to ask about the competition.
Because, let's be real, OpenAI is not operating in a vacuum. You've got Google, Anthropic, Meta, and a whole host of others, not to mention a booming open-source community that's getting better every day. When I use tools like Gemini or Claude or Perplexity, I really have to wonder, is the technological moat here really as wide and deep as a lot of people think? And this really gets to the absolute heart of the issue. For an investor, the real danger isn't doubting the power of AI. The technology is amazing. The danger is confusing what is technologically possible with what is financially probable. And trust me, those are two very, very different things. So, I'll just leave you with this final thought to chew on. There is zero doubt that AI is going to change the world. But the critical question for any investor is how it will change the world. Will it do it by creating durable, profitable value for shareholders for years to come? Or will it become something more like a utility, revolutionary, but ultimately a low-margin business built on a mountain of capital that might never see a decent return? That, my friends, is the trillion-dollar question.